Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on Friday, May 23rd. My name's Ian, joined here by Jamie. Jamie, good to be sitting back across the table from me.
Yeah, good to be here.
It's good to be back. So I think the last time you were in here a few weeks ago, and a little more volatility then, if I remember correct.
Yeah, I think it was
At least a little more clear volatility.
yeah, it was in maybe early April, so a lot more volatility
Right,
maybe.
right, a
Yeah.
lot more volatility. Yeah, I was doing an update earlier looking at the just the percentage of plus or minus 1% days in the market. It for a little stretch there, I thought that chart might go off the top of the chart, but
Yeah.
it settled down a little bit over the past few weeks. I mean, we've still seen movement over the past 7 days specifically. The S&P's down about 0.8% before Thursday's move. So we're recording this on Thursday, May 22nd in the afternoon. Nasdaq 100's down about a little over a percent. Small caps are down almost 2%. Small caps saw a little bit more substantial pullback with movement on Wednesday than a lot of the other broader areas of the market. I think before diving into some of the other broader areas, looking at that like S&P 500, we still see the default chart on a buy signal that maintained a positive trend throughout the volatility that we got in March and early April. But it has not reached new all-time highs yet, right? Which is a pretty notable overhead resistance that we're pretty close to.
Yeah, I think we're kind of at a make it or break it spot
Right.
for large cap US. We got back to where you're positive for the year, kind of into that first dip in March. So anybody who had gotten in on that, bought the dip, so to speak, they had an opportunity to kind of sell here. So it's gonna be interesting to see whether we kind of go back down, or whether, the buyers, the bulls keep it going from here. We've kind of been trading sideways for the last week or so, so I think we're kind of working some of that out.
Yeah. And it was the last week or so specifically. I mean, a lot of movements or conversational pieces that have come out over the past 7 days to lead to not a ton of market movement. It's a little bit surprising. I know we were talking earlier in the week, or I guess at the end of last week, like what, Friday at 5 or 6 p.m., the final credit rating agency downgraded US
Yeah,
long-term debt,
Moody's
right?
Moody's dropped the U.S. down to what is it, AA1
AB
instead of
something or
AAA.
whatever. Yeah,
Yeah,
they dropped it down a notch.
yes, they did. Yeah,
And they were the last of the three major agencies. What S&P Finch,
Finch
right? And then
or
Moody's was
Fitch.
Fitch. Sorry. Excuse me. If anyone's listening from Fitch, my apologies. Um, S&P did it first. Fitch did it, and back in S&P was back in
20 11.
2011. Okay.
Yeah, and then Fitch in 2023, and then we get Moody's this year.
Moody's this year, and the initial one from the S&P caused a little bit more of a stir in markets
Yeah, I think
because it was
that.
probably a little bit more unexpected, right?
Yeah, I think that day, I think the S&P was down, or the following day because it was after hours. The
Right.
S&P was down like 6%. Um, and then in 2023, I think we were down like 150 basis points. And then Monday, we weren't even down.
Yeah.
So,
We were initially.
we were.
Markets opened up down pretty notably that morning.
Yeah.
But then snapped back, all
Yeah.
the rallied right into the close consistently. And it's just been a little back and forth, but
Yeah.
not a clear direction for the past couple of days. So maybe not as much like perceived weakness as people might have thought over the weekend. Obviously with a lot of selling pressure opening up in the morning, and then people are kind of like, maybe this is not a big deal. But at the very least, it's an overhang on the rest of stuff going on. I mean, they brought it down a notch for a reason, right? They didn't just come out of nowhere. And so at the end of the day, it's not a great thing to consider. Maybe not the end of the world, didn't change any technical pictures right off the bat, but not a
Yeah.
great thing.
Yeah. No, I mean, it's U.S. government debt. It's not the same as if Apple gets
Right,
downgraded.
right.
they the people who can only hold AAA debt, they're still going to be able to hold US government debt. So it's not going to have this mechanical drop in demand, like you might see for a corporation. But there's a reason that they did it. And, at least the reason they said is because the national debt is becoming, in their view, unsustainable. Um,
Which was the same reason given the prior two cuts at different instances, if I'm remembering correct, because it was right after some fiscal uncertainty with raising the debt ceiling back at the initial S&P downgrade. in 2023 was also due to concerns around debt, right?
Yeah, the 2011 one, I think they had been having some like brinksmanship with were they going to raise the debt ceiling, were they not, were they going to shut down the government? And I think that's when S&P said, if you guys can't act like adults, we're gonna we're gonna lower the credit rating. I don't remember the exact circumstances in 2023. I do remember that pretty much every economist out there just kind of came out and said this is ridiculous. You didn't hear a whole lot of that this time.
No. Yeah, it was kind of expected. It's like, when is that going to happen?
Yeah.
Type of deal, maybe. But there were some other uns increased uncertainty that was initiated into the market over the past couple of days, right?
Yeah, so yesterday we had a 20-year bond auction, and it was not well received, low demand, even though the 20-year yield was above 5%, had a large tail, which is kind of what they talk about with the issue yield versus how far it goes out before they sell all of it. So it had a tail, which was pretty significant. And the
So if
10,
I'm understanding that correctly, that just means basically there was not as many buyers as they needed, and so the buyers got pushed further out.
yeah,
Okay.
yeah.
Which at the end of the
Um,
day, that's less people wanting
Less people wanting
20,
it.
20-year treasure. Got it.
Yeah, and so the 10-year was up 10, 12 basis points, 30 years up similarly, and obviously we saw a pretty significant reversal in stocks in the afternoon right
Hmm.
after the auction. We had been up, and then we closed the day down, I don't know, probably 80 basis points, something like that, maybe a
Hmm.
percent. Um, I think the bigger thing is we're now kind of nearing highs on the 30-year that we haven't seen since 2023, which was the highest we've seen in a decade or more. And the 10-year yield is kind of pushing past 4.5%. Um, so really not a good time for long duration bonds, looking extremely weak. And we have seen some weakness in the equity market over the last couple of years when the 10-year has kind of pushed up into that 4.5 to 5% range.
Right, right. And I think it's so looking at like the TYX as a 30-year yield index for those that are following along on the platform. We'll throw the chart up for those following on YouTube. I mean, move back to a buy signal, moved above that 50 level to 50.5. And like you said, we're up at what, 5150? So,
I think it's 50 and a half right now.
right, but 5150 is that high
Yeah,
from October of 2023.
yeah,
I mean, it's been a cover up the name, just look at it, just kind of sideways since then, right?
yeah,
I mean, it's all a big run up into that, some back and forth action between 40 and 50.
yeah,
But and now it's kind of up at the top end of that band. So you have the S&P at the top end of its relative range. You have most other kind of large cap equities hitting the top end of their bands, and you have yields at the top end of their bands. Um, which one's gonna which one's gonna break first? It's kind of the conversation here, right?
that may be the million-dollar question.
Right.
Um, Obviously, as you point out, I mean, this has been an area of very strong resistance for yields. So it's quite possible that we see them reverse down from
Hmm.
here.
Hmm.
But, I think at this point there are some like fundamental factors kind of
Do you think you need another catalyst to break through?
I I don't know. I mean, maybe just this kind of
What does
worry
the
about the
Jamie
debt.
indicator say?
I mean, we have seen people really back off the idea that the Fed's going to cut rates.
Right.
A month ago we were pricing in a 60 or 80% chance that we were going to cut rates in June. That's now been pushed out to September.
A rate cut would lead that to turn back around.
No, I mean, obviously the Fed controls the short end of the
Right,
curve. We're
right, right,
talking about
right,
the
right,
long
right,
end of
right.
the curve.
Yeah, yeah, but
But the expectation about where
right.
short-term rates are gonna be have an effect on the longer term rates. So I think we're just kind of seeing all of these small things begin to kind of point towards higher rates.
Got it. You're right, right. And I mean, it's the conversation around the yield curve predicting every recession. It's like 18 of the last six recessions or something like that, right? Um, the issue there is not necessarily when a yield curve. I think we were talking about this maybe a couple times ago when you were on. It's not when the yield curve inverts.
It's
It's when it reverts back,
yes.
right? And this is essentially seeing it like revert more, basic. How do you say
Yes.
that?
I mean, yeah, we uninverted some time ago. People talk about the yield curve inversion. Historically, the recession has come closer to the reversion, the uninversion, than the inversion. But I mean, it's been a while
Yeah.
since we uninverted. We haven't had a recession yet. Um, so, at what point, how long
What,
does it have to
how
be?
long is the gap before it's something else? Yeah.
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 I'm sure the aficionados of the yield curve inversion, if we have a recession a year from now,
They'll take credit.
they'll say the yield curve did it again.
Right. Right. And if we don't, it was too far away.
Yeah.
Um, the So in terms of shifting gears and looking at how this affects, so we got this range that we're in for seeing for yields, seeing for equities. I mean, those are going to likely break in some direction. It could just move sideways, can continue that kind of sideways movement. Um, but that'll be, I think, notable to watch heading into the summer months,
Yeah.
right? When you're looking at other assets that are more notable to watch historically heading into different times of the year. Crude oil is one that comes to mind that has seen more inconsistency, especially last year in the summer months. I think just in looking at the chart, when you get into that May to August timeframe, it's just about, kind of bouncing back and forth. And so we see that all starting to at least show a bottom formation with crude oil looking at 56 as a bottom on its chart that it reached earlier this month, and now it's reversed up and formed another double top up at the 64 point. Backed off a little bit from that, but that inconsistency seems to be coming back a little bit.
Yeah, I mean, crude has not really been able to develop any kind of strong uptrend or really, I mean, a strong downtrend. I mean, we've been obviously trending down since, I don't know, 2023 when it
But it's a
peaked.
choppy down.
It's a very choppy down.
Yeah.
Yeah, and right now, I mean, we broke below multi-year resistance in the low 60s, and now we're kind of like right up against it, kind of seeing if that's gonna act as I'm sorry, we broke below long-term support. Now we're kind of back up at it, seeing if it's gonna act as resistance.
Hmm.
I mean, just it's hard to imagine crude oil kind of going down into the 40s again.
It was
Um,
hard to imagine it going negative, but
well, that's true. Yeah.
but yeah, that would be quite the move coming off. But it to your point, it hasn't been able to show some kind of now. If you really zoom out and like kind of squint your eyes a little bit, you see more of a clear downdraft going back over the past year. But you got to squint pretty hard
Yeah.
to see it. It's really just kind of been sideways.
Yeah, you got to put it on a pretty long-term scale
Yeah,
to actually see like a clean downtrend.
right.
Yeah.
If it can break to the upside, hit 65, we're looking at overhead resistance from there. It isn't really coming in until around the $71 mark, um, which is a big jump. It's got a little bit of a gap.
Yeah.
Um,
I mean, I would say even, you have a little bit of resistance there, but I'd say the real resistance probably is that January high up at $80.
hmm hmm
Um, but you really have to clear all of that previous support in the low 60s, in my opinion. So I don't know. We'll see what'll happen. I kind of do commodities for our weekly report, and I've been faked out by crude a few times, looking like it was going to break
You
out
do
for the
commodities
upside.
and you cover energy, right?
Yeah,
So you got the whole, you, you,
yeah.
you know all the ins and outs of
Um, yeah, except I don't know who knows the ins and outs of crude over the last year. It's been tricky. Every time it looks like it's breaking out, it goes the other direction.
Right, right. In terms of looking at other commodities, gold has been the other hot commodity
Yes,
this year,
it's been
right?
a hot commodity.
Literally, and been very. It's seen a lot of really sharp action over the last 2 years. I mean, gold has seen a little bit of a sell-off with the market rally that we've seen over the past couple of weeks. But we were talking about and looking at the trend chart of GLD. I mean, that fund is still up 26% year to date.
Yep.
S&P's down or up zero point 0.8
Yeah.
before today's move, right? It's about flat. That chart rallied right up to all-time highs 315. Turned right back around now and gave a sell signal. I mean, that is the most clear indication of a shakeout pattern I think that I've seen in a while,
Yeah.
which probably means it won't actually come to fruition. But that's I mean, talking about a shakeout pattern, that's a pattern that's looked at historically as when you have a security and a strong uptrend, gives a double top formation, doesn't lead to another buy signal, and turns right around and gives a sell signal to shake out those that are bearish
Yeah.
on the price action. The expectation being when those bears are out of the security, bulls take back over and the rally continues, right?
Yeah.
Um,
That's it.
hasn't reversed higher yet. The
That
buy point is that reversal back up into a convexes, which will come with movement to, I believe, 310 if we did get a reversal higher. Hasn't happened yet, sitting at around 303 at the time of this reporting. But gold is it's been looked at a lot. I've heard it referenced a lot more over the past few months than I had over the prior few years.
Yeah, I mean, and the chart of GLD now. I mean, we're looking at a $5 scale, so
It's crazy,
each box is over 1%. So
right?
the chart of the gold continuous contract, which is kind of shorter, has already returned to a buy signal. So we're already seeing some indications of positive up movement in gold once again. It really has been kind of unstoppable.
Mm-hmm. Mm-hmm. Yeah, and I mean that speaks to the uncertainty. We had what last night Bitcoin hit a new all-time high again too.
Yeah,
Which is really odd to see yields moving higher, stocks moving higher, gold moving higher, and Bitcoin moving
yeah.
higher.
Well, and Bitcoin hitting a new all-time high before stocks.
Right.
Um,
Well, some areas did for stocks, just not the S&P.
yeah,
Yeah.
or the Nasdaq 100.
Right. Right.
Um, I kind of always thought of Bitcoin as, you know, a, an, a risk valve, excess liquidity valve. It would go up faster and go down faster than anything else. So it's interesting to see that, it didn't, at least on a relative basis, kind of dip as much as stocks. Um, I don't know if on a percentage,
They
uh,
probably did on a percentage basis.
but but in terms of and how far it went down on its chart versus to a trough from, let's say, like 2022, I don't think it fell as far as stocks did. And then it has obviously recovered to an all-time high more quickly. So I think that's pretty interesting that you're just not seeing the same kind of weakness out of Bitcoin.
Right. And it'll be interesting to see this time. I think that it's funny. Every time Bitcoin falls out of bed, it's like, oh, that's the riskiest play in the world. Of course, that fell out of bed so hard. Then when it rallies back like this, when stocks haven't, now I'm starting to hear conversations just in financial media listening to like, oh, Bitcoin is decoupling from equities, decoupling from correlations to the Nasdaq 100, whatever it is. It's like, well, a lot of that, I've heard that before, and then equities catch up.
Yeah.
Right. Which will be interesting to see this time if is a true decoupling, given that there's more institutional coverage of this, it's more ingrained in the financial sphere than it was previously, and a lot of these drop downs.
Well, I mean, it's also just kind of interesting when you think about Bitcoin or gold. I mean, in and of themselves, no real intrinsic value, right? It's only worth what somebody will pay you for it. It
It's
doesn't
true,
it doesn't have earnings. You can't live in it.
but they only
Um,
sell one at Costco,
that's true.
and that's gold,
At least for now.
at least for now. Costco's going to start mining their own coins.
Yeah, they probably should.
But yeah, I mean, great. It's a good point.
And so, it's just interesting that while we're kind of working out what's going to happen with the market and tariffs and all of this, these assets that aren't really tied to anything, because you don't have to worry about earnings. They're the ones that are kind of doing the best. And, I wonder if maybe that's telling us something that,
Money's got to go somewhere.
yeah.
Right.
And, if balance sheets are bad, you just put your money in something that doesn't have a balance sheet.
Right, right. Yeah, that's true.
So I don't know. We'll see. I will say I don't understand Bitcoin. I don't really understand gold. So
Yeah, I
I'm
mean,
not jumping on that train.
it'll be interesting to see how all this shakes out. I mean, that's why we have the charts. That's why we have the indicators. That's why we have the stuff to kind of fall back on, keep track of it, set alerts. For those that are following along and haven't checked out our website very much, we do. You can get access to most of the site for free now. Dorsey.nasdaq.com. Definitely check it out and set alerts. You can give us username, password, give us the email address there. You get an account. You can set some alerts, create a portfolio there, and keep track of some of the stuff. That way, you don't have to wait for Jamie and I to sit here on Thursday afternoons, or you're listening Friday to hear that Bitcoin's hitting a new all-time high. You can just get the price alert, right?
Yeah,
That
it
is
might be
the
hitting another new all-time high by the time you're listening to this tomorrow.
that's true. Nice little spread triple top setup. Let's see if it can break out from that in the next 24 hours.
Yeah,
You got anything else to hit on, Jamie? I know we've kind of run through a lot. I mean, we have got a lot coming up over the next week. NVIDIA reports next week. I think a lot of eyes will be on that.
absolutely.
Next Fed meetings in June. Do they have one in June?
Yes, they do have one in June. I could not tell you the date off the
Coming
top of
up
my
probably
head,
three
but
three or so weeks away.
yeah, I mean, I think the last one was about 3 weeks, and they meet every 6 weeks.
Right.
So yeah, we should be coming up on it in about 3 weeks.
I'm sure we'll have more to talk about around those.
Yeah, I mean the Fed meeting should be interesting that they'll actually have a new economic projections with
Mm,
this one. So those are always interesting. And maybe we'll get some clarity about where they actually see things going. They haven't been too keen on easing recently.
right, right. Yeah, clarity would be good across the board for any of this
Yeah,
moving forward. But again, that's why we have the charts and the indicators to kind of keep track of it and tell us when things are moving. So with that, I mean that gives us a good run through. Hope everyone listening has a great Memorial Day weekend. Jamie, hope you have a great Memorial Day weekend
you
too.
too.
Thanks for tuning in this week. We'll be back to touch base on anything else next week.